You're watching Closing Trades on ET now. I'm Anisha Jain, and for now, the markets have been a bit of a tumble. In fact, we're at the lowest point of the trading session, below the mark of 20,550. So almost 150 points shaved off the highest point of the trading session. The Bank Nifty is down almost 400 points right now, so a cut of a percentage coming in there. And the culprits are HDFC Bank, SBI, Axis Bank. These are the heavyweights which is dragging Nifty lower. Not to forget the other heavyweight, Reliance, that's also batting for the best today. And you also have Sun Pharma with a cut of around 4%, Maruti, Titan, Cipla. All of these names are coming under pressure. What's actually holding out a bit is perhaps maybe a couple of pharma names as well as auto names. So Tata Motors and Bajaj Auto is holding up in the green. And then for, of course, the pharma space, a lot of these smaller cap companies are doing well, whether it's a Concord Biotech, whether it is Entero Healthcare on account of that initiation that has happened from Jefferies, or also the CDMO play, the likes of Newland Labs as well as Syngene, which is reacting to the update coming in from Goldman Sachs. So a couple of these names are in focus. But separately, in terms of the other gainer as well, Bharti Hexacom, that's the latest listing on the bosses today, and what a listing it has been. It started off with a gain of around 30%. From there, it's only inched higher, and right now it's sitting with a gain of over 40%. Puravankara is the other one which is holding up well. CDSL, Archean Chemical, Quest Corp, these are some of the names which are well in the green, while Kirloskar Brothers, Policy Bazaar, Sun Pharma and Spark, both of those stocks as India Bulls Real Estate is coming under a lot of pressure, and ditto can be said for Vodafone Idea as well, with that 18,000 crore FPO announcement setting in. But what about the way forward? That's something that we always discuss with our battery of guests on the show. To start off, Kunal Bothra is joining us in the studio. Kunal, let's begin by asking you about the market setup right now. Nifty has taken a bit of a pause, and so has the mid-cap and small-cap index. I think this will be after 13 to 14 sessions that small-cap might end in the red.
Well, yes, good afternoon. So I think it could probably be a healthy time when the markets consolidate or go into a marginal correction from here on. So far the texture of the markets has been a lot more broad-based. We've seen the advanced decline ratio being a lot more healthier. The mid-caps and small-caps recovering quite well from the mid of March. Levels where many of these stocks were beaten down by a margin of 25 to 40% as well. So I think it's been a very good recovery. So I think maybe the markets are looking out for some bit of news across the globe as well as domestic news to try and go into a bit of consolidation. I hope that it doesn't lead into any major kind of a correction, at least on the benchmark indices. So far, we are still trading above the key, support points, even from a very short-term kind of a point of view. So 22,200, 22,500, these are two strong support zones for Nifty over the near term. We've already hit that 49K mark on the Bank Nifty on, a couple of days back on Wednesday. So today we may probably be looking at a personal correction over there. 48,200 is a key support on the Bank Nifty.
Okay, so healthy consolidation is what we are witnessing, and hoping that it doesn't become worse. Naresh, I wanted to get your view as well, especially on the pharma sector. There are very divergent moves right now, while of course the likes of Metropolis, Syngene are trading higher. You also have names like Sun Pharma, Laurus Labs pressure. Within pharma, how are you breaking down stocks in terms of strongest charts and weakest charts?
There are very different moves. So if you look at Sun Pharma, maybe down today, but it is up almost 30% over the last 3-4 months. Then you have something like Laurus, which went up in the last few sessions and has taken a dip today. The stock went up from 360, 380 odd levels 2 weeks back to almost 470. So overall, very divergent moves. So out here, the one which I continue to like is Dr. Reddy's, which broke out about 6,000 levels, went to 6,500. Retest and is now slowly holding on to the 6,000 mark, and that's the one which still has a lot of catch up to do. So that is one stock which is promising. It's liquid and it's large, but the other names, a lot of names have already had very large moves like Oro Pharma, which is struggling around that 1150 mark. So for now, Dr. Reddy seems the only one where the report is still interesting.
So that's about the pharma stocks and the divergent moves that we are seeing there. But Mayuresh Joshi also joins us on the show. Mayuresh, hi, good to be speaking with you. Let's start with pharma itself, because a lot of stars there today, whether it's an Entero, whether it's a Concord Biotech, Newland Labs, quite a few names are actually holding up in the green. What's your top bet within pharma? Maybe mid-cap, small-cap?
Afternoon, Anisha. No, two aspects. One, I think within the large and mid-cap pharma names, we continue holding Sun and Dr. Reddy's in our portfolio Obviously, the rationale behind it remains the same. They've got a very good specialty portfolio, and the expectations in terms of more specialty launch with the kind of trials that they're probably going to do, specifically, I think the stage 3 trials and expectations of launches in the next few quarters. I think that will augur well in terms of both the portfolio mix as well as the margins related to these launches, as well as revenue exclusivity. So I think Sun and Dr. Reddy's is something that we continue to hold in our global portfolios. Within the mid-cap name, Natco Pharma on declines is something that we will be keeping on our watch list. Again, I think the branded generic space where Natco is largely present seems to be unperturbed in terms of any kind of price action or erosion itself. The second element also is the kind of margins that they probably make because of the branded generic business. Expectations of few key launches, few key FTFs in the next few quarters that will certainly augur well in terms of their product mix and portfolio mix as well. The geographical mix holds up wonderfully well from Natco Pharma as well. And therefore, I think the maintenance of EBITDA margins at these elevated levels can be understood to be a base scenario for the company as a whole, and expecting a stable and solid earnings growth to continue as new launches take place in the next few quarters. So I think Sun, Dr. Reddy's as a whole, we continue to hold that in our portfolios. Something like a Natcon declines is something that we'll watch.
Right. Okay, that's the take on pharma. In fact, Syngene is the one today which is scaling up nicely. And of course, names like Metropolis as well from the healthcare universe, 3.5% higher for this particular stock as we speak right now. IRCTC, Exide, Hindustan Copper, these are some of the buzzers from within the broader end of the market. And Kunal, you've been mapping the charts of Hindustan Copper, right? Another almost a 3% dash coming in today too.
Yeah, still looks attractive, and I think that the last week, one of days of consolidation, I think it actually been a positive sign for stock price, because the indicators were getting into slight overbought territory. Those fewer days of consolidation, mild correction, I think just about less than a few percentage points for the stock, I think has probably brought the indicators back into a neutral territory. So these are the kind of moves which indicate that the stock, the print for the stock is still intact, and the stock should see more upside over the to medium term. Now we should be looking at a psychological break of that 400 as the next bigger target for Hindustan Copper. Looking at the way many of the commodity stocks are moving up higher, Hindustan Zinc, metal stocks like Vedanta, SAIL, etc., I would probably believe that there should be more legs on the upside for Hindustan Copper.
Okay, so that's the take coming in on Vedanta, Hindustan Copper, and a couple of these metal names that continue to gain ground. Mayuresh, I'm wondering whether you have a view on Bharti Hexacom. What a listing it's been.
Oh, fabulous one, Anisha. And again, I think the circles that they operate out of, I think they're fast-growing circles in the context of the telecom industry as a whole. ARPUs have held up pretty well for them. Expectations of them across the 200 rupee ARPU mark as well. Margins have been relatively stable, have been relatively strong and stable as well. And therefore, I think all these characteristics put together probably ensure that the kind of earnings growth, earnings momentum that this stock can probably exhibit be pretty solid as well. So to that extent, yes, I think it's a solid listing. I think if investors are probably looking at something in this space, my own sense is that all telecom players, including Bharti Airtel, have done phenomenally well. Jio through Reliance has done phenomenally well as well. The trigger for these stocks is going to be ARPU increases, Anisha. And my own sense is that over the next few months, you will see some element of ARPU increase come through. A lot of the capex, as an example for Bharti Airtel, has been front-loaded in terms of the 5G infrastructure spend. And therefore, I think if you look at the big picture argument for Airtel, Hexacom or Jio in general, ARPU increases will probably mean that cash flows improve. Because of cash flow improvement and because capex has got front-loaded, there will be significant amount of deleveraging that can happen in the balance sheet in the next few quarters. And incrementally, I think that leads to better return ratios as well. So I think the space looks very, very interesting. As I said, my own space, my own take is ARPU increases over the next few quarters.
ARPU increases is what Mayuresh is betting on. In fact, Bharti has had a good pop on its listing itself, 33% premium to its issue price. And Vodafone Idea, on the other hand, is down about almost 5%. Remember, the board approved FPO of almost 18,000 crore rupees worth of equity shares, the opening date for which is the 18th of April. Vodafone Idea currently lower by about 4% as we speak right now. Mayuresh, what do you think of this sizable FPO by Vodafone, and would it really reset all the problems that it's had in the past?
So afternoon, Aisha. I think it's a very complex scenario for Vodafone Idea. I think they need this capital not for growth, for ensuring that the stability in terms of their existing business operations is properly maintained. They've obviously been losing subscribers in their circles just by the sheer inability to probably have funds in place, and having these customers transition from either 2G or 3G to the 4G or 5G platform itself. There will be accelerated investments that will be required for this entire transition to happen. And debt at these levels is extremely elevated, more than 1,50,000 odd crores. So I think it's more stability capital that you're probably looking at this juncture to probably ensure that the operations just carry on in the normal course of events that probably take place. So I think within the space, barring Vodafone Idea, might still be an underperformer. I think all these other three players, I mean, Bharti Hexagon is a part of Airtel, but I think Airtel Jio should continue doing well. Star, Aisha, is something that will have a rub-off effect, and it already has, because that provides stability in terms of the tenancy ratio that Vodafone Idea give to them. Also, I think the need for incremental towers expected to come through as the 5G ecosystem starts building across the length and breadth of the country will also probably keep this stock in focus. Relatively stable balance sheet, and therefore I think tenancy ratios being stable and improving thereof can be a trigger for the stock from the current levels. Not suggesting go out there and buy Indus Towers, but I think the momentum in Indus Towers can very well continue.
Okay, the momentum on Indus Towers is here to stay, and betting on a tariff uptick in telecom prices. We'll take a very quick break, but we'll continue tracking Vodafone on the other side as well. Back with closing trades right here on ET Now. Definitely under pressure for the markets as we speak right now. We're at the lowest point in the day, 185 points lower, and next week as well, remember, is a truncated one. And today we officially kickstart earnings as well. But Vodafone, that's the one which is something that we're tracking. It's currently lower by almost about 5% as we speak right now. The board, remember, has approved an FPO of equity shares equating to about 18,000 odd crore rupees. But the bigger question is, that's going to really resurrect Vodafone Idea's troubles or not. Here, you can just take on the same.
Now, there are three historic problems for Vodafone Idea. First, let's be clear. They have lost relevance and market share. B, cash flow and their ability to get back into the business, because telecom business has a big capex requirement. And C, the government moratorium and the auction spectrum premium. Now, there are three historical problems for Vodafone Idea. First, well, let's be clear, they have lost market share and they have lost relevance in a very competitive telecom market. B, high debt and a problem in terms of expanding the future or funding the future capex, and then fund requirement to meet the entire government obligation. If this entire fundraising exercise sails through, it perhaps will act like a bridge, and it will be more than a band-aid, which in a sense will have near-term impact on Vodafone Idea's future business. If the fundraise goes through, they will have necessary and more cash to really expand and take care of the capex requirement. Once that starts, they can become relevant once again in a very competitive market where Vodafone Idea is a voice-dominated player, and now they really need to add data subscribers. So they have fuel to expand and go ahead with the capex. If the expansion goes through, services they come back, and that in a sense will ensure the relevance will start coming back. When it comes to the government obligation, well, I would say that that is more like a FY26 need. And if the fundraise goes through, remember, government has a very large ownership in Vodafone Idea. Some would imagine that that also would go through. But when you look at stock markets and if you look at the enterprise value of Vodafone Idea, it is a mix of debt and equity. In this case now, the debt component comes down, the equity component goes up. And that is what could really make the future enterprise value of Vodafone Idea perhaps more relevant. That's how markets, they value company. Component of debt goes down, equity goes up. What it means is that 10 rupees, some would argue and say the downside in Vodafone Idea could be limited. If you're buying the stock, you're pretty much buying it at the option value, with the assumption that in future, Vodafone Idea could be much more relevant, and it would be a company where after a very shaky couple of last years, they will be able to gain some market share, and that will only increase the relevance of the company. So it's not like this fundraise will take care of all the problems of Vodafone Idea, but in the near term, can this really increase the relevance of the company? The answer to that could be yes.
Okay, yes. So finally, a step in the right direction for Vodafone. If it does happen, how much it will help and how long the runway of growth is for the company, that's something, of course, we'll have to decide and time will tell. But at least to help us with some sort of crystal ball gazing, we have with us Sanjeev Bhasin joining us on the show. Mr. Bhasin, what do you make of this quantum of 18,000 crore? A, if you've heard anything from the investors post the roadshows, are they inclined to invest money into the company's FPO? And secondly, how long do you think this will help Vodafone to sustain its operations and expand it as well?
Yeah, good afternoon. So, Anisha, Vodafone has a market cap of roughly 62,000 crore. The promoter put in 2,000 crore at a premium, and they are looking to raise 18,000. Like you said, the tides may have changed in the shorter term, given that ARPU risen, EBITDA margin came at 42%, and the debt overhang, meaning there is no debt to the banks. It is only the they have never defaulted in any debt to the banks. It is the debt which is converted into equity and interest in which Government of India took a stake at 10 rupees. Now we have to see who participates in the FPO. Are there marquee people who want to take a stake? Because we think the survival and the capex both will add up to better performance. If EBITDA is at 42 and you have an ARPU at 140, and Bharti and Reliance now closer to 200, then there is room for them to raise that. But for that, the liquidity is the necessary ingredient. So I would say longer term positive. Short term, we know that the pressure is there because it has been priced at prices which are very lucrative. But the expanded base will take time to service. Three things they have to watch out for. One is how much of capex is going to be fruitful in the near term. A, B, what can they do as far as raising ARPUs, and three, retention or even getting back some market share, which they have done through some aggressive marketing. All these three things tell us that they are in a survival mode, but the capex is going to be the necessary, icing on the cake, which will keep them in survival and turn around the company in the short to medium term.
Absolutely, that's the take on Vodafone. So just for the benefit of our viewers, Sanjeev, what do you do at the current price point for Vodafone? A, if you're already an existing shareholder, and B, if you're looking to buy afresh into Vodafone Idea.
So I saw very simple. If you were and you made money from that 12 rupees when we asked you to exit at 18, we still think this is a very good long-term story. As you are aware, fintech, data, everything is on your mobile, and we cannot but argue that mobiles have become more precious than gold. And with the ongoing, tariff now, hardly any war. It has become more of raising prices because of inflation, the feel good, the wealth effect. I think Vodafone is here to stay. So you will have to broaden your horizon. At 10, 11 rupees, if you subscribe, you have to realize that 62,000 market cap plus 20,000 is going to mean that servicing of debt and servicing of returns will take time. But if you have a 2-3 year window, then don't say you didn't get the opportunity to get into the third biggest player on telecom. I still think the survival is key, and the promoter has shown his intent by putting in money. Now, if they do get in some marquee names who take a stake, I think it bodes for good times for mobile data and the services they provide over a slightly longer period. So longer period returns are going to be back-ended, but in the near term, the price is in your favor.
So price is in your favor, though it's going to be a bit more back-ended. That's about Vodafone Idea, Mr. Bhasin. If I had to stretch that argument and talk to you about rest of the telecom players as well, whether it's the latest this listing of Bharti Hexacom, Bharti Airtel, or even towers in its ancillaries, which are the other stocks you would want to make a bet on if you were to in the telecom sector?
So, Anisha, Indus Tower was our top pick at 205, 2010 when you realize that Vodafone is back in place and they are what they had in their last quarter written off as provisions as Vodafone's recovery, that has all fructified. In fact, Vodafone has paid back most of the dues which were there previously. So that makes Indus Tower's business very healthy. Now the stock has already been an outperformer, so I cannot chase that. But in this space, I still think that Bharti and Jio will be the ones which are to be favored. On the other hand, you will have to see some of the which provide input costs or supplies to them as far as handsets go. And in that, you will have to do your research into what stocks are there. Overall, Anisha, I am slightly bearish on the market. So I would advocate that if you have raised cash and stay on the sidelines, you will get better opportunities to enter. And if you recall, in the last week, we've been telling you that we expect the market to, see some more downside. That is some time away, and we will then recommend some things to which we think could be a good time around that time.
Seen on that note, we let you go. So that was a comprehensive discussion on the telecom sector and the road forward. But shifting focus to TCS, because that's what we expect to deliver a decent set of numbers in the course of next 30 minutes to 1 hour. But Mayuresh, what cues are you watching out for come TCS's numbers?
So clearly, Anisha, I think the expectation that the street has is 1% growth, 1.2% growth in terms of constant currency, around 1.4, 1.5% growth in terms of dollar revenues sequentially for TCS. Obviously, the order wins from BSNL is going to be a significant one. And therefore, I think the revenue contribution from this one over the next few quarters might be significantly contributing to the overall revenue pie. I think the growth prospects should be reasonably placed, and therefore I think the EBIT margin should hold up about the 25% mark, which the street probably believes in. Now, coming to the commentary, I think the commentary will be looking forward to in terms of more avenues, in terms of cloud, in terms of AI, and therefore I think the expectations in terms of TCVs holding up over the next few quarters, albeit I think if you leave aside a quarter or two, where I think decision making is getting deferred by a couple of quarters. I think the second half should show significant amount of recovery, and therefore I think all these elements put together would probably mean that if commentary stays very positive, and as our take is that management commentary should remain positive for TCS as well. Second half recovery can be excellent for TCS as well. So I think generally, I think how they're looking at revenue trends, what is the deal pipeline, utilization levels, attrition, all those aspects will be taken into fold. It might be a little bit sticky this quarter and the next, but my take is that the second half recovery can be a good one for TCS. So let's wait for numbers, but anybody holding on to the stock should hold on.
Okay, that's the take coming in on TCS. But Anil, you tell us, what's your poll penciling in for TCS today?
Well, the expectation from the overall sector is weak, so not much. But yes, amongst the peers, this might just stand out as a better earning because we're expecting growth to be 1.5 to 2%. That's because the BSNL deal will kick in. The furloughs which are impacting the performance in Q3 won't be here this time around. So we're expecting a better number. Margins pretty much stable around the 25.2% mark. And the profitability will be higher, especially because of course, the revenue growth, the operating leverage kicking in. But also last quarter, there was a one-time provision which will not be there. Deal win momentum is also expected to be quite strong. Same $9 billion range, because remember there was that $2.5 billion Viva deal that had happened, so that will support the sentiment. But again, the important thing to watch out for is the management commentary about FY25. Will it be high single digit growth or mid single digit growth? That's important to know, because double digit nobody is penciling in right now. And the hiring outlook, demand outlook, those are the big things to watch out for. Valuation wise, the stock is not cheap by any metric. It's sitting at what, 28 times forward earnings, so it's not really cheap. But I think let's see what the company delivers, because that will set the tone for the rest of the IT pack as well. That's about TCS. But in the meantime, take a look at Exide. That stock just is firing away in the trading session, and so is Amara Raja Battery. Mayuresh, one would wonder, after the kind of up move that we have seen on Exide, should anyone try and fathom buy afresh on both of these counters?
I mean, declines would be a better strategy. And a clear disclaimer, I'm a little biased because we do hold these stocks in our portfolios. Again, I think the entire premise in terms of global majors probably looking at Exide as their supplier for lithium batteries. Even Amara Raja is developing those technologies as well. So as these capacities start coming through in the next few quarters, and because I think we've got a very niche advantage in terms of manufacturing these batteries out of the capacities in India as well. And barriers are relatively higher because I think new players will take both time, significant amount of capex, and a distribution network as well to probably ensure that they probably even get near what Amara and Exide are probably doing. Will mean that their probably dominance in terms of the battery market probably continues. The second element in terms of what Exide probably has, the HDFC Life, just in case they want to carry on the capex, which is almost 500, 600 odd crores in terms of creating that 6 gigawatt hours in terms of battery capacities, the technological help that they're probably getting from their Swiss partner as well. I think all these steps will probably mean that leverage does not increase onto the balance sheet. And they've got a hedge outside autos as well. Industrials are still expected to do very, very well as capex, both government and private, kick in, and specifically private capex over the next few quarters. And the replacement market as well, where pricing probably remains in favor of these battery makers as well. There's also a small auxiliary battery that is probably required for EV players, whether it's two-wheelers or four-wheelers, which will also aid volume growth going forward. So there's a lot of triggers and tailwinds for these battery makers in the auto and space. So anybody holding on can definitely hold on. Fresh investors need to probably take declines as their buying opportunity.
Okay, that's the take coming in on why Exide could be the buzz of the day. But Mayuresh, good to have you on the show. We'll let you go on that note. Let's do some closing trades as well as we step into the last lap of today's trading session. Kunal, what's in your list?
So L&T France is something that looks attractive. The stock is coming back towards a breakout around the 170 mark. So potential breakout above 170 levels for L&T France is something which I would watch out for in terms of.
Right. Naresh, what about your closing trades?
So that buy on IRCTC, the stock continues to look interesting. It had topped out around this 1050 mark, almost closer to it in 2021. A recent top back in January, February was around that level. Today we are above those prices. So a good breakout trade here could go towards between 50 to 1200 in the short term.
Take a very quick break on that note. Still haven't resurrected from the lows of the day. We're down a good 200 points on the index right now. Sun Pharma, L&T, Maruti, ONGC, ITC, all under pressure as we speak. Let's see what the last half an hour has in store for us after this very quick break.
Well, Vodafone Idea continues to be headlines, the latest being the reports on your screen wherein it suggests from agencies that the likes of GQG Partners, SBI Mutual Fund probably are willing to put money into the FPO, which is going to be launched on April 18th. It's a big FPO of 18,000 odd crores. But this is something that even we are picking up from our exclusive sources, that a lot of marquee investors are likely to check in the FPO as well. And the feedback from a lot of these domestic and international institutional investors has been quite positive. Let's get across to my colleague Anurag Joshi to get more details on the story. Hi, Anurag.
Hi. So Vodafone Idea's follow-on public offer, which will be the biggest public offer for the public offer in the country, has secured commitments from key domestic and international investors ahead of the launch. Now the issue to the public shareholders is launching on April 18 and to the anchor investors on April 16. Now, sources tell Ichi now that some of these investors also include sovereign wealth funds, and the institutional portion of the 18,000 crore issue is fully covered on commitments from the institutional, domestic and international investors. Some of these institutional investors are also willing to commit funds to bridge any shortfall if the retail portion of the public sale is not subscribed. Now, the Vodafone management and some key bankers had been working on the deal the last 2 and 3 months to ramp up support for the proposed issues, and there were also meetings held with the management management with the investors to drum up support ahead of the sale. Now the sale closes on April 22 and the price band is 10 to 11 rupees. And ahead of the sale, the company announced that promoter entity of the Aditya Birla group has committed 1,075 crore rupees through a preferential allotment for the company.
Right, Anurag, we'll leave it at that. Thanks so much for that exclusive info. You're seeing Vodafone Idea spike up and definitely lift off from the session lows. It's now, I think, almost in the green, or at least getting in there. But Mahantesh Sabirad as well joins into the show right now. Mahantesh, hi. Vodafone FPO to the tune of 18,000 crore rupees, and now some of the news agencies are reporting that perhaps GQB or SBI Mutual Fund also could be participatories in the FPO. Wanted to understand your thought on Vodafone and whether this size of the FPO will actually do away with Vodafone's troubles.
I think Vodafone did require a lot of cash infusion simply because the debt levels are too high, and we're going to see that happen soon with this. If this news is to be believed, then it's a substantial amount. 20,000 crore plus is something which will offer immediate relief to Vodafone in terms of their debt woes. Mind you, the overall debt levels are in fact much higher, but it at least paves the way for securing some amount of relief for a few months ahead, until which time they should be able to get some useful internal cash generations in, and therefore augment their overall cash positions to alleviate the debt. So debt being the big ask for them, such a large infusion obviously helps.
That's about Vodafone Idea. Let's see whether it turns the fate or not. But for now, that stock is holding up just around that flat line, especially on account of dilution that might happen for the minority shareholders. So Sri just factoring that. Separately, Newland Labs is up 8%. You have CDSL, which is doing quite well. Nuvama Wealth is gaining traction. In fact, this entire space, this stock market ancillary kind of names have been doing quite well. And we're just hearing that buzz that there could be something that would standardize the KYCs, because a lot of people in the industry have been making noises around that, and that could mean good news for the likes of CDSL, etc. Is this a theme that you would like to play?
It's a very narrow theme, actually. Just one stock or probably two more stocks to consider from an investor's perspective. And as it is, the comfort valuations for CDSL or the likes isn't there right now. So these moves, like I said, are very narrow moves. Very few investors would get really a bite into such a play. And there are more other plays. Overall theme in terms of the stock market growth is such that you can actually revisit your portfolio, look for better stocks ahead. The basic theme being CapEx would drive a lot of stocks year in onwards.
Right. Okay. That's the take coming in right now in this particular sector. Exide, IRCTC, Metropolis, Crompton, they're all names which are continuing to hold up as we speak right now. For the market, we're not really seeing any recovery though. Kunal, now down 200 points. Nothing alarming, would you think?
No, it doesn't look like. I think because it's just few pain points across large cap stocks. So it was Reliance Industries, then few odd percentage correction, the likes of L&T, and then I think few of the large cap IT names, I think Infosys, etc., the ones which are still really under some pressure. So I think it's across few percentage points across few of the other larger cap names. No major damage or change of pattern in these larger cap stocks, and at least the ones which have been doing pretty well for themselves. So I think on the back of this, we would probably term this as maybe a one-off correction, which could probably be leading to the index coming back into a range of consolidation.
So that's the take coming in as far as the market setup right now is concerned. The week gone by has been quite solid for the metal names other than that, because not only hit a record high this week, but almost a 3% gain coming in. And other sector which has actually stood out by the end of the week has been pharma, because there has been a bit of a reversal there. In terms of the frontline index as well, if you look at the top gainers right now, which really stand out, it's Bajaj Auto, Tata Motors. These two stand out, and TCS too has moved actually from the red into the green. Let me take it across to Naresh as well and get a sense on the auto stocks because they're holding up quite all right, Naresh. Anything specific on the charts that you'd want to recommend within auto?
So we've seen one by one the rotation in the auto pack, and now the latest rotation is IM Motors. Now the stock did nothing for almost a year and a half after topping out in around that 3,900 mark in 2022. Finally, the stock has crossed into new all-time highs above the 4,200 mark. And we've seen when such breakouts have taken place, there have been structural moves, whether it was a Bajaj Auto or a Hero MotoCorp or even a TVS Motor started off. So in this case, it continues to be a buy at 4,100 to 4,300 and could go towards the 4,800, 5,000 mark. So IM Motors looks the most interesting. The other names have already moved up quite a bit. The next one on radar would be Ashok Leyland, which has always faced a lot of resistance around the 185 mark. So once it sustains 185, that could be a trend change.
Okay, that's the take coming in on those buzzing names right now. Vodafone Idea definitely has jumped up. We earlier pointed out news agencies quoting source-based info that it could perhaps be GQG and SBI mutual fund, which could be interested parties applying into the FPO, and now it's almost breaking into the green. Kunal, you wouldn't venture a trade on Vodafone Idea right now, would you, amidst all the news flow?
Yeah, too much of news flow, extreme amount of volatility for the stock, nothing major in terms of the price patterns where you can expect that the stock is going to a big turnaround. Yes, it's found support, finally been able to break below its 200-day moving average. There's one positive which is there even after that first round of first half of sell-off for the stock price, where it did not buckle below the 200-day moving average. But then whether it leads into a turnaround and the breakout of the previous highs, I think that's something to watch out for. I think it's better to try and wait out on confirmation of a breakout rather than on anticipation that the stock would get into a turnaround.
Just wanted to shift focus a bit. Kunal, and talk about gold. It's now past what, $2,400 at the global price index, and while it's going higher on one end, you have Titan, which is coming off as well because people are now worried whether people will buy gold or not at this price of the gold jewelry. What's your sense on both these charts?
So on gold specifically, I would be very bullish on the commodity. I think now maybe over the next 1 or 2 months, we may see some sort of a consolidation from here on. So maybe 72,000, 71,000 could be a pivot in rupees for gold, and then 2,360, 2420 approximately for gold in dollar terms. But I think maybe in the second half of this year, say post July, August is where I would expect the second round of breakout uptrend to try and come back into this key asset class. So I would probably expect that many of these gold related stocks also they would start to go up higher, say after a bout of consolidation. In the next round of up move, I would probably believe Manappuram Finance and Muthoot are the ones to spot for. So Titan has been a bit more sideways. No major triggers on the indicators for the stock price where we can expect any kind of we can anticipate any kind of a breakout for the stock. But I think from the gold related spaces, if I have to pick up and choose, I would probably go with Manappuram Finance and Muthoot Finance at current levels also.
Mahesh, would that your tilt as well be? Not a Titan, but the financiers? Okay. Mahantesh, I beg your pardon. The same question to you.
So on gold fund, I tend to agree that we should go for the gold financing companies. It's not just the Muthuts and Manappurams of the world, but certain PSE banks also utilize gold as one of the favored mortgage items, and they have substantial gold loans as well. We have seen that when gold prices rises, you typically tend to have, from the bank's perspective or from the finance company's perspective, a better cover over the loans that are outstanding, and higher prices also drives in more customers ahead in terms of newer loan disbursals. So it's better to revisit some of these gold financing companies as well as banks. As it is, the gold finance companies have been underperforming for the past 1 odd year or so. So it makes sense to get into them.
Okay, that's the take coming in on some of the gold financiers out there. Let's just bring up what stock of Kolte Patil as well is up to, because their Q4 updates have come in and it's an uptick of about 6% in the pre-sales that they've achieved so far. Of course, we had Ashiana Housing as well, which has been massively up in trade today. The value of the area sold has seen an uptick for Mammoth, 98%. 863 crore rupees is what they've clocked in this particular quarter gone by itself. And then, we've already seen how strong the Q4 updates have been from a Godrej Properties, or for that matter, from a macro deck developers as well. Naresh, any trading opportunity within the Realty pack you think right now?
So in terms of real estate, the name which continues to look interesting is Mahindra Life Spaces, which has broken out above 600, 620 and is sustaining even in today's market as such. The second one is Godrej Properties, which broke out into new all-time highs. The previous high for the stock was 2600 back in 2021, from where all the way to 1100, then paused at 2500 for quite some time, dipped to 2150, and now we are above the 2600 mark. So any retest of that band should be a buying opportunity, a huge cup and handle formation here. And one could have a stop loss below 2450. So Godrej Properties looks interesting in the larger names.
Okay, that's the take coming in right now on what's buzzing within the Realty pack. Let's just take stock of what else is buzzing in trade today, and a whole host of other stocks. While we've of course marked what the list of the day has been up to, and what a solid one it has been for Bharti Hexacom. A 33% premium to its issue price and continues going strong. 42% of a dash is what you're seeing on this particular stock. There's also Credit Access Grameen. Goldman Sachs has initiated a buy with a target price of 1788 rupees per share on this one. They're anticipating a very healthy forecast of 21% PAT CAGR over FY24 to 26. So that's something that is in focus. We also talked about Intero Healthcare. It's currently locked in upper circuit, has been the case after the buy call initiation coming in from the House of Jeffries with a target of 1510, which indicates a solid 50% upside from the current levels on Intero. And then, of course, Metropolis as well, wherein the Q4 updates too have been very strong. The core business revenue has seen a growth of 15%. The B2C revenues have seen a growth of about 18% on a year-on-year basis. They managed to repay their debt, and they are now a debt-free company as of the previous financial year closing. Within the healthcare space, what is it that you still like?
I think the hospital space is something one needs to be in, because a lot of private hospitals have come into the listed space the past few years, and they're doing quite well, quite wonderfully well. In fact, there are two phenomena that is driving the overall hospital theme. One is the general health insurance penetration is growing day by day, with the result that a lot of hospitals are seeing in large amount of patient inflows, particularly in the tier 2 cities, coupled with a lot of government activity on the health insurance side, both the central as well as the state government. So this is a phenomenon number one, which means that insurance penetration is rising. And phenomenon number two is that you notice that the general inflation trend on the medical costs has been actually very high. Consequently, a lot of hospitals are going in for preventive healthcare kind of packages, which drive in more OPD kind of revenue rather than IPD or inpatient kind of revenue. So they're drawing in a lot of ancillary kind of revenues, I would say. Both these phenomena tells me that the hospital sector within the healthcare could drive a better valuation. In fact, even some of the diagnostic kind of chains can do better going ahead.
That's the move, or rather view coming in right now on the entire healthcare pack. What's under pressure then? Let's analyze that as well. There's Maruti, which is down about 2.6%. There's L&T, which is lower by about 2.5%. Most of the IT names as well are not doing a whole lot. They too are in the red as we speak. ITC is down 1.6%. Adani names, SBI, HDFC Bank, Axis are all under pressure as we speak right now. And so is Reliance, which is down about almost 0.7%. But Naresh, let's analyze Nifty Bank and, what could really add weight, rather put pressure on the index from here, because, what we saw as ICICI Bank, for instance, last couple of trading sessions, that is that's been the leadership stock, right? That's quiet, but the rest of the private banking names, the large ones, they're the ones which are under pressure. What do you foresee next for the Nifty Bank composites?
So the Nifty Bank overall, the chart looks pretty interesting. We've come to previous 52-week highs and all-time highs. The leadership is slowly building up. The momentum is not great. The two largest weights continue to be HDFC Bank and ICICI. So HDFC after that move from 1450 levels to 1550 has taken a pause. Till the time it holds above 1500, there is a possibility it can again go back, make a slow steady recovery towards 1600, 1650. Same is the case with ICICI Bank. The stock out into new all-time highs. The momentum is not great, but still holds on to the levels of 1070. So the base is shifting higher for most of the banking names. So overall, the view remains that the Bank Nifty is a buy dips and we could eventually head up higher and cross into the 50,000 mark going forward.
Point taken. So that's the view coming in on Bank Nifty. Credit Access Grameen, that was the stock which was on Goldman Sachs radar this morning. Talking about a decent amount of upside on that one. The stock has already moved 3 to 4% higher, but within the entire microfinance and these small finances, Mahantesh, which would be your top bet? Any of the names that you have studied there?
I think there is a merger and M&A kind of activities likely to happen in that space. A lot of PE interest also exists. And we have seen in the past that some of the microfinance companies who had seen management changes can do potentially very well. One name that comes to my mind is Vandana, although I've not yet looked at it thoroughly in terms of valuation perspective, but from an M&A activity perspective as well as management change perspective, something seems to be happening there. So from microfinance perspective, now that we have had a large pause from the RBI in terms of interest rates, the rates overall in the economy are stabilizing with the result with the upcoming monsoon season, we might see credit pick up for the microfinance companies ahead. So lot looks interesting out there, but primarily would like to look at those companies which could potentially become either M&A targets or potentially ones who can gobble up others.
Okay, point taken. So that's coming in on the entire microfinance theme, but chemicals, that's one space which seems to be finally coming out of its slumber as well. That's what experts are telling us. We spoke with a couple of them earlier in the day to talk to us about whether the worst is over and things are looking on the upside. We'll play those slides shortly, but in the interim, what's your take, Nuresh, on the chart of some of these chemical companies?
So a little cautious on some of the names because the follow-up has not been great after the breakout. So one name which is breaking out today and has been holding well recently is Aarti Industries, which has shown good momentum. So that's a stock which looks like bottoming out in the momentum strong, but I would keep a very strict stop loss below 720. So out here, momentum is shifting, but would be careful because a lot of these have been seeing a lot of selling pressure on every key moves. I would rather be looking out for agrochemicals, which is where we've seen recovery in something like a UPL Limited or a Aztec PI industry. So instead of chemicals, would be focusing more on agrochemicals.
In fact, on the subject of chemicals, Ajay Joshi, the chemical industry expert, also shed light today when we spoke with him earlier in the day about the entire chemical sector, saying that it's actually agrochemicals, which is currently a bit of a lag, and the rest of the spaces seem to be pretty much on the uptick.
All the building blocks prices have gone up in China. That means a very, very strong demand. And China being the global factory of chemicals means the global chemical industry is also on the recovery side. Unfortunately, can't say the same thing for the agrochemicals industry. There we will still see some pain for 2 to 3 quarters more. So in India in particularly, the companies active in the EV chemical space, battery chemical space, there, we will see the most money-making opportunities for companies like Neogen, GFL, Himadri, Aether Industry. Agrochemical, China has combinedly added 2.4 million tons of new capacities in 2023 alone. And most of the molecules where China has added capacities are glufosinate, acetamiprid, CTR, mancozeb, metallochlore. Now in all these products, India has also been an active player. So Indian companies are facing immense pressure in the export market. Neogen, where electrolyte additives production, the sampling has already been done at multiple customers in the electronic chemical segment. These are customers from both battery chemicals as well as semiconductor space.
Okay, so that's the chemical sector finally seems to be coming out of its weakness. But separately, you also have a lot of these names like TCS, as I was talking about, is finally actually moving into the green. Maruti is one weakling actually. Rest of the auto pack is doing okay. Kunal, anything on the chart specifically on Maruti that's suggesting further weakness?
Not really. I think it's been one of the stronger ones from the entire auto pack so far over the last 1 month or so. I think except for other than this and as well as I think Mahindra and Mahindra, I think many of the other stocks have actually gone into a correction as well as a sideways consolidation for themselves. This could probably be a one-off corrective wave for the stock price. The volumes today are a bit on the higher side for the stock price, so which means maybe there could be one more leg of this corrective wave which could probably cover the stock. So sub 12,000 is where I would probably believe that this correction could settle into, assuming if it's a short-term kind of correction.
Okay, let's also get in some BTST trades going on. Note, Kunal, you go first.
So I'll go with two buy calls. HAL, Hindustan Aeronautics, is the first stock which I would suggest as a buy. The stock breaking past about the 3,620 plus mark, which is the previous swing breakout resistance. So buy with a target of 3,750, stop loss at 3,600. And J Chemical is something which is also coming back into a breakout mode above 1,800 levels. So 1,880 as a target, stop loss at 1,760.
Okay, and Nure, what about your BTST strategies?
So first is a buy in IRC. New 52-week high here looks strong in momentum. Stop loss at 1,040 price of 1,100. Second is a buy on delivery, which is very close to that breakout about 475, 480. Good volumes today. Would expect it to break out tomorrow, hopefully. Stop loss at 464, target price of 490.
Okay, so those are the top BTSC trades from a technical experts. On that note, gentlemen, we let you go. Thanks so much for making time and speaking with us today. But time now to take across to Vinny to get the sense of the closing trades.
So today doesn't seem like a very exciting day at the end of the day. What we're seeing is Nifty is going to be closing at the day's lowest point. And Nifty clearly under pressure today, down almost 1%, down 240 points in trade today. Sensex 2, clear pressure coming in there, down more than 800 points in today, closing with cuts of almost 1.1%. Nifty Bank also was among the top sectoral losers, down 1%. And Nifty Bank clearly under pressure. Other than that, we have PSU banks also that didn't do anything. And all the sectors today, whichever sector you look at, is going to be closing in the red. Clear pressure there. Nifty Auto at one point of time was trading in the green, but that also gave up gains by the second half of the day and closing with cuts of almost 0.6%. So that's how we're looking at. Now, in terms of top losers that came in for the Nifty 50, we did have Reliance Industries that was under pressure, so the heavyweight being under pressure. Other than that, HDFC Bank, L&T, Infosys and Sun Pharma clearly under pressure. Obviously, we did have news flow around Pharma's facility in Dadra as well, which had received an OAI. So that concern coming in for Sun Pharma, and that is why Sun Pharma clearly under pressure. And other than that, you're seeing that Nifty Pharma as a whole today is the top sectoral loser, down almost 1.6%. Other than that, let's look at the mid and small cap. That was performing at one point of time, but by the end of the day, we have seen that Nifty Pharma, Nifty Midcap as well as the small cap too have given up gains, down on 0.6% in trade. And what's clearly causing some bit of a pressure today is Policy Bazaar, Page Industries. We do have Prestige, Laurus Labs, IGL, which all of them have seen a fall in the Nifty Midcap, as well as in the small cap. Also, we have PPL Pharma, Graphite, IIFL, which were under pressure. Other than that, Bharti Hexacom, the new listing on D Street today, saw a bumper listing as much as 40% uptick at one point of time, 40-50%, also closing with gains 42% on the listing day. Let's pull up some of the names which had actually touched a 52-week high today. We did have Petronet, Questcorp, KEI, IRCDC and Cummins, which managed to see very strong gains at one point of time, also managed to touch a 52-week high in day. Entero Healthcare, that's one was locked in upper circuit today. We did have a note that came in from Jefferies initiating coverage on this one. Credit Access Grameen also ending on a positive note, and Credit also on the back of a note that we had from Goldman Sachs. Other than that, the CDMO businesses, so Syngene, Newland Labs, which also was in trade after Goldman Sachs initiated coverage with a buy rating. And lastly, that, we did have Laurus Labs, which was under pressure because they initiated coverage with a L rating. So yes, that's how the day looked like. Metropolis Healthcare, Dr. Lal Pathology in the diagnostic space, and Ashiana Housing, all these in trade after some updates on these fronts as well.